Just a day after Urjit Patel's sudden exit from the Reserve Bank, Mint Street has a new boss. Shaktikanta has taken over charge today. Manish Dayal of Bearings Private Equities and Krishnan ASV of SBI Cap Securities now join in to detail what could be the new governor's priorities. Gentlemen, good afternoon to both of you. Manish, let me come to you first. There's all sorts of news going around. A lot of stocks are rallying on hopes that there could be, a more benign regime, that there could be a lot of relaxation of rules, not just for, sectors like banks or NBFCs, but even, some of the names in particular. What would you think would be top of the new governor's mind?
So, good afternoon. And so really these are expectations and which had led to the so-called issues between the government and the central bank over the last couple of months or so. And, that's what is alleged to be the reason for a quick departure of the earlier governor. Now, to my mind, for a new governor who's just stepping in, and he's been a very pedigreed and acknowledged bureaucrat as a career and has worked for various finance ministers earlier. So what we've seen historically is that people who've come from the government, Bimal Jalan, Y.V. Reddy, D. Subbarao, once they have donned the hat of the central bank governor, they have become staunch advocates of the RBI autonomy after being in as governors. So I don't think that the new governor, Mr. Shaktikanta Das, is going to walk in with a magic wand and kind of change course immediately for a lot of these reforms and policies which are underway. Now, we all know the wish list from the government side, which is on, the PCA list, the liquidity line for NBFCs, softer default rates, especially for the power sector, lower rates, etc. Now, and we'll talk about it, but I think one of the biggest priorities for the new governor would be to build bridges with the government, which I believe he's better suited than any other person who could get this job, and to start the communication and get a two-way dialogue on various aspects of governance at the RBI.
Okay, so those are first comments setting the stage. Basically, Munish, you're saying that you don't expect Mr. Das to dramatically alter policy in any way, right? I mean, no dramatic, in a way, course deviation to be expected. Krishnan ASP from SBI Cap Securities is also with us. Krishnan, what are your thoughts here?
Yeah, hi, many thanks, Prashant. So, broadly, would agree with what Manish mentioned as well. Most of the gentlemen who have donned the RBI governor's hat have, over a period of time, established and demonstrated a fair amount of autonomy. Right. So we expect nothing different, irrespective of the change in leadership this time around either. Having said that, our house view has been for a while that with inflation significantly undershooting, there was some elbow room opening up for at least easing of rates or at least an easing of stance. If incoming data remains consistent, and that's a conditional statement that I'm making here. I'm saying with the tailwinds around lower crude prices, the rupee dollar, the way it is moving, etc. If this opens up a little more headroom, irrespective of who is in charge, we think that elbow room does open up.
Okay, but you're linking it to external factors, right?
So I'm saying this is essentially inflation-driven. Given that the RBI has a single-pronged objective, single-pronged mandate, it's but natural that they will react to incoming data, isn't it? So to that extent, if inflation doesn't ease, then irrespective of who is in charge, I don't think the outcome necessarily needs to change.
Okay, let me put it differently. As things stand right now, with the inflation, what we have and the trajectory, could Mr. Das see things differently as far as interest rates go?
Okay, so which is why I'm saying, so this is not just about what the new governor will do, because the rates are essentially now set by the Monetary Policy Committee. A 5-1 equation becoming a 4-2, even then you would continue with rates where they are, correct? So to that extent, I think the governor alone will not be able to swing. There is an established protocol. There are 6 gentlemen on the MPC committee right now. So it will need to swing beyond just the one vote, right? Having said that, liquidity is definitely something that can be eased, and that's probably within the domain of what a governor can do individually, the various means, measures, and tools that are available to the Reserve Bank of India. And I think that's probably somewhere where even if the policy rates don't move, system rates can actually adjust much more fast. So,
okay. Okay, Krishnan, specifically, Munish, just coming back to you as well, but Krishnan, easier liquidity for NBFCs, dedicated line of some sort. I mean, that is one of the things which is going around. Easier sort of deadlines as far as the PCA framework is concerned. Possible? I mean, these can be done by the RBI. I mean, it's not. It doesn't come under the ambit of what the MPC can do, unlike interest rates. What's your sense?
Yeah, definitely within the RBI's domain. But I mean, I'm not privy to any reasons why that should abnormally change overnight. I think there are frameworks in place. There are very clearly defined thresholds because of which banks go into PCA. And similarly, banks emerging out of PCA also have similar thresholds to breach. So if recapitalization was to happen, can that mean 2 or 3 banks step out of the PCA? Probably yes. I don't think the process needs to be hurried up or, just because there is a change of leadership, that process can be hurried up.
What is your sense here, Munish? I mean, on specifics, I mentioned 2. One is PCA banks, the prompt corrective action banks. The other is, something for NBFCs, where bulk of the problem with liquidity has been. But there is also the issue of, promoter shareholding norms. Could we expect a softer, lighter touch under a new governor?
So I think each one of them is a contentious issue. And I think the broader issue over here is the fact that I think everybody is questioning that is there an intent to compromise RBI's autonomy in some way by the government? And that's really the conflict which is playing out in public domain. And I think there needs to be efforts on both sides to ensure that the autonomy of the institution is intact and that the decision-making is kept in an autonomous and independent manner. While I say that, I think it is equally important to understand that autonomy also means very high level of responsibility and accountability for all the stakeholders. And the stakeholders in this case being all the banks and the government and the non-banks. So yes, we can have institutions with a lot of autonomy and independence, but that does not take away the responsibility to ensure that the system stability, the financial stability, and various stakeholders are treated in a manner which ensures that there is credibility to both sides. So when you look at it from this perspective, I think the first thing to be done is to open up the lines of communication and quote-unquote trust within the 2 sides of the government and the institution. I think each one of the issues has a merit to it, and they need to be discussed and put in within either a framework or a roadmap to address these issues. Now, to just work in a siloed manner to say we have a theoretical framework and frankly what happens in the market or to players is not really a concern at this point in time, I think needs a little balanced approach.
Munish, briefly, do you think something needs to be done to boost liquidity in the system?
I think yes. I think the central bank has to look at it. I think what is more important is that the central bank should have realized that before the government did. And the fact that there was shortage or liquidity, the fact that one sector of the lenders, which are non-lenders, were getting into a slight crisis mode, which kind of got the money markets into a freeze, which could have been maybe prevented and is now gradually trying to get back on its feet, is something which is internal to India and to the governance structures here to have avoided. And now it is on to them to make sure that it goes back on its feet and running.